Hey, and welcome to the channel. My name is Joshua Shigala. I've a bit of an OG in the space, so I thought I'd give some insights on news and events and react to them and let you know what the truth behind it might be. So we're going to start now with Larry Fink from BlackRock. Has come out of the woodwork as a Bitcoin evangelist. So let's see what he has to say.
First time we've had an opportunity to talk to you about it, which is Bitcoin, the Bitcoin ETF. We're going to be talking to Gary Gensler, the chair of the SEC, who made that decision reluctantly, maybe even begrudgingly, which was announced just 2 days ago, and we talked a lot about yesterday on the broadcast.
Yeah, definitely begrudgingly. I mean, the first ETF was trying to be created back in like 2014 by the Facebook boys, the twins there. Yeah, it's been a long time in the making, and they've just kept on putting it off. And I think it's fair enough as well, because it's very difficult to find the sort of volume that's needed for some of these big players, and some of the infrastructure wasn't there. But yeah, we can go into why I don't think an ETF is probably the best thing. But anyway, let's keep going.
How big a deal is that for BlackRock? And this was for you a big switch as well, because you were a naysayer for a very, very long time.
Yeah, I probably switched for the first 3 years of thinking about it. I was a naysayer, and about 2 years ago I switched. And I'm actually, as I said in the last 2 years, I'm a big believer.
Are you a
Hang on a minute. 3 years, and then last 2 years you've been a big believer. Well, that means the first 10 years, not 3 years, Larry. The first 10 or something years, to actually 11 years, if you want to go right back to the start, you have been not looking at this thing at all. And people like Jamie Dimon have been taking the piss out of it and buying in the background because they're not that stupid. But yeah, it's unfortunate that it's taken this long. And what's interesting, this is one of the first technologies that really has come up from the ground up. Like usually a good solid technology will be spotted by VCs first and institutional investors invested into, and it's only once it gets publicly listed that the plebs can invest in something like some sort of new technology. And Bitcoin was really one of the first things where you could actually, if you had your ear to the railway to keep an eye on libertarian and freedom and see the tyranny that was coming down the line, specifically when Julian Assange was and WikiLeaks was around back in the early days, and you saw that there was a need for this, and you had doubts about 9/11 and all these sorts of things. That's how you would have got to know why fundamentally Bitcoin is a massive invention. Not only that, I mean, just the fact that you have the first rare digital asset, the fact that you can send a digital thing and the guy that getting it knows that you haven't got it anymore. That's a phenomenal breakthrough in computer science. So it's scary to me that these sorts of so-called smart money haven't grasped that concept before. But I love how they come out of the woodwork now as full-on experts. Anyway, let's keep going.
You a believer personally? Meaning, is the Fink family a Bitcoin buyer or a buyer of this new ETF?
Well, now I could do that. I cannot, I don't want to compete with our clients, so I don't buy single assets. I'll buy mutual funds. I'll buy single ETFs. So I have an opportunity to do that now. But I'm a believer in it because I do believe.
Well, you're not a believer in it if you just buy the ETF, because you're not really buying Bitcoin. An ETF could be hypothecated, it could be strung out, you could be, you don't know what you're getting unless there's ultimate transparency there, which you could actually have with Bitcoin. You could show the blockchain addresses that the ETF hold, and brainiacs out there will manage to figure out which ones they are. But yeah, like, these things can run in fractional reserve. So the whole point, if you do get it, is that you actually hold the asset, and you're not competing with your clients. Come off it. You just, anyway, let's keep going.
It is an alternative source for wealth holding. I don't believe it's ever going to be a currency. I believe it's an asset class.
You don't believe it ever becomes a currency?
No, I think we're going to create digital currencies. We're going to use the technology for it. We're going to use the blockchain.
How important is that, though, to then the long-term value?
Yeah, this is this whole blockchain, not Bitcoin argument, which has been, run around for years and years. And it's kind of like saying, well, I really like poker as a game. It's got a great future. Playing cards, not so much. Playing cards don't really, no. But poker as a game, fantastic. But it's just, it makes no sense. You need Bitcoin. You need a token to incentivize the game theoretical mechanism behind the blockchain. So again, showing his colors that he doesn't really understand it on the fundamental level. What he sees as a great investment because he's seen the constant ups, the downs in these cycles when everyone goes, oh, it's dead. And every time it comes back up, they're like, it didn't die. Okay, interesting. It didn't die again. Oh, look, it didn't die again. So I think that's really what he's seeing, but I just don't think he understands it. Let's go back.
Value proposition
Of Bitcoin?
Of Bitcoin. If it's not something that ultimately becomes
what's
a currency,
the value
if it's simply, we'll call it digital gold, it's an asset of some sort, what does that mean?
It means,
in terms of price?
I believe it goes up if the world is more frightened, if people have fearful of geopolitical risk, they're fearful of their own risk. It's no different than what gold represented over thousands of years. It is a asset class that protects you.
Right.
And
I have to agree with that. It is something that will fluctuate with fear, which is unfortunate because it shouldn't. It should just be the thing that people use. It fundamentally is something to escape to if the government becomes too tyrannical, if the government's fiat becomes ridiculous, inflates, steals from you, which is exactly what's happening.
Unlike gold, where we manufacture new gold, we're almost at the ceiling of the amount of Bitcoin that we created.
When you hear somebody like Cathie Wood,
yes,
who was on our broadcast yesterday, say that her base case is that this turns into a $600,000 a Bitcoin valuation, base case.
These numbers that people trump out, like 600,000, $1 million per Bitcoin, all of these are like ludicrous. And I tell you why. Absolutely can happen. You can absolutely have a $600,000 Bitcoin. I mean, it's 21 million divided by infinity. So you can definitely have $1 million Bitcoin, no problem. But what actually is the case is that you can have a $60 million Bitcoin, because the side of this equation is the side that nobody knows, and that is how much are they going to print in the next few years. Anyone can tell you how many Bitcoin there will be in 40 years' time. How many Bitcoin there will be? There'll be 21 million. Nobody at all can tell you how much USD will be in circulation at that stage. So that's the thing, and that's what determines the price.
And a million plus in a super optimistic case. Are you anywhere in her realm?
I haven't thought about it. To me, that what we are trying to do is offer an instrument that can store wealth. I think if it gets that even close to that high, gold will represent even a bigger value. And let's be clear, if you think it's digital gold, there's going to be a reference point between gold and Bitcoin.
Yeah, so I started the very first Bitcoin physical gold exchange back in 2014, building it with my brother called Voltoro, and in fact, there's the sticker for it there. This was because that's exactly what I wanted. I was like, why are we pricing everything in fiat, specifically US dollars? Why are we pricing Bitcoin. We all escape Bitcoin to get away from US dollars, yet we're pricing everything in US dollars. We're pricing Bitcoin and every crypto in US dollars. Well, so I thought let's create Vaultoro where we price things in grams of gold. Never took off. It was a niche exchange. It never got hacked. It's been around. It's still around. But it's it's very niche. The Venn diagram between Bitcoiners and gold, that little cross, really wasn't as big as I thought. But it's one of those things that I agree. I would like it to be what Larry Fink says, and many gold bugs and many Bitcoin OGs would love it to be priced in gold. But at the end of the day, everybody knows how much milk costs, how much bread costs, how much something's value is in their local currency. They don't really understand it in the grams of gold, unfortunately.
But let me get back to what happened yesterday. A part of our announcement that you mentioned in the opening, that we changed the architecture of our firm.
Right.
And much of it has to do with how we think about iShares and ETFs. When we bought BGI, very few people believed in that acquisition. And we were pretty mistreated for a couple of years, because we said active and passive can coexist. Obviously, we were right in that. Two, we said the fixed income market will be transformed through ETFs. That has now happened. Yesterday, we had the first day of Bitcoin ETFs. And our reorganization is taking that ethos of what has happened over the last 10 years. We believe ETFs is the technology that's going to transform every asset class. We believe everything will be done through ETFs. And so we believe this is just the beginning, and we needed to embed ETFs across the entire.
So what does that mean? If you're Rick Reeder, who we've had on the broadcast for years.
Rick is now doing more ETFs in his active space now. There's a great example of how we are taking what a very active investor and putting that into an ETF platform. Let me be clear. I think ETFs are step one in the technological revolution in the financial markets.
They're not step one. Step one is the blockchain. The Bitcoin and digital ledgers, the ability to trade without a centralized authority. Step two is DeFi, is the ability to have these automated market makers that don't need these centralized middlemen all taking a cut to finally pass it to the market maker, where you end up with scraps at the end for your investment. Instead, you put your investment directly into the market. Step one is Bitcoin. Step two, Ethereum. Step three, DeFi, Uniswap, Camelot, these sorts of things. And yeah.
Step two is going to be the tokenization of every financial asset. And to me, this is where we believe it's going. So we're looking at Bitcoin, we're looking at ETFs in the same manner. These are technological changes that can allow us.
So why do you need an ETF when you tokenize the asset and trade it on a DEX, on a decentralized exchange? Fundamentally, by the way, I think, I've worked with gold and crypto probably the longest of most people. And fundamentally, there's a problem, and there's still a problem, and it still hasn't been solved. And that's the demurrage problem. That's the cost of holding the underlying asset. And how do you get that money out of a bearer-based asset? Now, you can have fee on transfer, but fee on transfer has a whole lot of problems, like Uniswap v3 doesn't work. And some of the routers on DeFi don't work with fee on transfer. So it kind of breaks that model. Maybe there will be a DEX that does support fee on transfer coins, but specifically things like gold, and we noticed it with Vaultoro, is that people buy gold and then they hold it for a very long time. They don't tend to send it around and trade it. Like Larry said, he doesn't believe it's a currency. It's more of something you hold, and that's true definitely for gold. maybe that'll change. Maybe people start paying in Tesla stock and stuff like that, which is tokenized. But yeah, I think I think this is a very interesting side of it, is that we still don't know how to pay for demurrage on these tokenized assets. So for him to say everything will be tokenized, yeah, I think it'll probably get that way, but it will take a very long time to figure out how to do that properly, because the underlying asset needs the costs. Like, it costs to hold gold. You need to pay for the insurance. You need to pay for a whole bunch of different, the people with guns to protect the thing, the big doors, the vaults. All these things cost. For property, you need making sure painting the property. You need to make sure that the plumbing's working. All these costs to have real world assets take a while. So anyway,
allow us to move forward.
What did you see yesterday, by the way, in terms of inflows as it relates to Bitcoin?
We were very happy with the flows. It appears that we received about 40% of the flows yesterday. I mean, one day doesn't make anything.
Are these new customers? Are these people who are coming out of other funds? I mean, Grayscale is the biggest player in this space right now. Are you trying to take share from them in terms of taking those clients over, or are you trying to create a new class of customer?
Primarily, we're trying to create an opportunity for new customers can invest in this financial instrument. Over the long run, do we believe?
I love how these people are like, oh, it only did X in the first day, so it's a failure. This was a lot of the narrative that was coming out, and it's also ludicrous. Like, what, you can't, like Larry said, you can't judge it on one day. This is a new asset class. A lot of people are very fearful, especially from the massive amount of FUD that has happened over the years to try and crush Bitcoin before it became mainstream. It's just for drug dealers. It's just for the black market. It's just for scammers. It's just like all this nonsense, rather than looking at a fundamental level that we are flattening the playing field for a global community to bank the unbanked and all of this good stuff.
Just think about the fee differential between an ETF and some of these trusts.
Right.
These trusts are like 120 basis points.
Very expensive. We were talking with the head of Grayscale yesterday. And still an expensive product.
And these are 20 to 30 basis points in the ETF wrapper.
Well, it's expensive, by the way, for if you're a Grayscale customer to sell your shares.
Well, it's very
taxes.
expensive. Yes, and this is the big issue with the SEC, and this is something you may want to ask Gary. The industry asked to transfer in kind into an ETF, and that was denied by the SEC. That's a fine.
Meaning, let's just put a fine point on that. The industry, meaning companies like yours, asked the SEC to allow folks who might have owned shares via a Grayscale to be able to transfer those in kind to a BlackRock or to Fidelity or whomever.
And so that there would be no tax ramifications. That was not denied. They wanted to really just create from scratch cash only, which we all respect the SEC's reasoning.
That creates an opportunity actually for Grayscale to keep those customers for a much longer time.
It does, but I think over the long run, when you start adding up the fees and adding up the fees, people are going to start thinking about redeeming and then ultimately going into an ETF.
Longer term, do you now expect other crypto?
So, this is one of the reasons we created the standard, is so that people can lock up their crypto into a smart contract. So they still hold the private keys and basically borrow, mint new stable coins against that new value, against those assets at 0% interest with only 110% collateral. And that is also a great way of optimizing taxation for capital gains tax. So in most countries, capital gains tax is not needed if you've borrowed against those assets. So this just simplifies a lot of taxation issues.
Other cryptocurrency ETFs? Meaning, do you think that Gary, and we'll talk to him later, Gary
like Ethereum
will have to approve an Ethereum ETF? And is that a function of something the SEC has to do, or do you think that all these things have to go to court first?
I couldn't respond to that. I see value in having an Ethereum ETF. As I said, these are just stepping stones towards tokenization. And I really do believe this is where we're going to be going. We have the technology to tokenize today. if you want to talk about, think about this. If you had a tokenized security and you have a tokenized identity, you, Andrew, the moment you buy or sell an instrument, it's known. It's on a general ledger that is all created together. You want to talk about issues around money laundering and all that. This eliminates all corruption by having a tokenized system.
Jamie Dimon disagrees with you on that, but, or at least to some degree.
And Jamie Dimon is one of the most corrupt people you can get. I mean, he was effectively playing the market by
on top of Bitcoin.
By poo-pooing all of Bitcoin and crypto, and then buying in the background. Like this guy is basically a financial terrorist. Anyway, I hope you enjoyed that. There'll be more coming. Please leave a comment, subscribe, all of that stuff. You know, all the YouTube stuff, and let us know what you think. I should I should do a reaction on. If there's any other videos you would like me to react to, let me know. It's been fun. I like it. I might do it again. Let's see. It's been how many years since I made my last video about Bitcoin not being a scam back in 2011. So it's been a while. I'll be more regular, I promise. All right, folks. Until next time, thanks for joining me down the rabbit hole.